The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at this German DAX market as we usually do to start the show. As you can see, we went up and touched those highs at the 1.27 expansion. If you'll notice, at the very high level up there, folks, you see how it keeps jabbing up and doesn't really explode through it? That's what you want to look for when you're watching some of these ratios, because they'll have a tendency to go up and touch them and just not power through. And that's a real key spot to look at, because when they do go busting through those ratios to the upside, then you know there's something really big happening, and that's going to be, very, very important. So just remember, when you start to look at those things, you really want to see a lot of strength. We saw this in the gold, as we talked about this, that it needed to get up there and close above that 1277 on a 15-minute chart or half-hour chart and stuff. That's what you really want to be watching. So keep an eye on that. We'll take a look at gold in a little bit, but mainly we're seeing this in the DAX. Now, I had several requests because we talked about the DAX. We talked about the it has a Q in it. That's why the NASDAQ, not the DAX, but the NASDAQ. Why the 49.19 level was so high, because we were on the air yesterday right at the opening, we hit 49.17. That's where my alert went off. And if you'll notice, you'll see a really nice 3 drive to a top pattern. You have 2 perfect ratios where you did exactly the same thing we were just talking about, going above the old high by just a little bit and then just not following through. That's at that 1.12 level. That's a very important number, that you see a market make a new low, but it doesn't go anywhere. It's the key number on how you square a circle in sacred geometry. And if you'll also notice on this NASDAQ chart, you're going to see a perfect A, B, C, D pattern also culminating up that 49.17 level. So that's why we had the importance of the NASDAQ at that level. In the heat of the battle yesterday, when I'm doing the show, there was no way I could pull this up to show you, because I had to find it first, and I can't do it and, talk at the same time, and probably should have spent more time looking and less time talking. But anyway, that's what's happened. This is what we're looking at now, is we're coming into pretty strong support here at 48.48. That's a 382 retracement. It's also the old 61% retracement support level. So anything below 48.30 would tell us that we're most probably getting ready to go lower. There's another thing that should tell us that we could be going lower. We've already exceeded the correction in the BC swing on this one. So that's another reason to say that this could have more of a correction in it. So we want to watch that with a great deal of interest for sure. Now, there's a couple of things that we really need to focus on this morning that I think are going to be relatively important here. We want to look at. One of them is right here. We have a possible situation here in one of the most popular stocks in the world. It's also a political stock, along with Twitter, but it is Facebook. And this is Facebook over the last several months, folks. As you can see here, we've left a potential for an island reversal pattern here, and the market is going to gap down below 132 today, and that would trigger an island reversal. Now, whether it's going to continue or not remains to be seen, but it's very seldom that you can see a stock that's trading for $132 a share where you don't have to risk more than $1.50. That's a 1% risk on a particular stock. So keep an eye on Facebook. That's going to be very interesting. If we remember, we saw that same type of pattern in Apple when it was trading up around 138, and also in the IBB index when it was trading up into 379 areas. So it's an interesting pattern to look at. Maybe it works, maybe it doesn't, but the key part of it is you certainly don't have to risk very much. That's the whole key. Remember, folks, when you're doing trading and all other things that you're doing in your life, the main thing that you want to keep in mind is that all of your frustrations in life come from unfulfilled expectations. In other words, you think something's going to happen, and it's not going to, and that's where you get into trouble. So just remember to manage your expectations. Don't expect too much, and always keep a door open and a window open so you can exit the trade without any trouble at all. Now, the next situation I want to show you brings back a whole lot of memories. I was listening to John Logan, and he was talking about 3M, and I want to put this chart into the room. I have to tell you the story about 3M, folks. You got to go back to 1960 to Terre Haute, Indiana. There were two little boys there playing baseball for the Babe Ruth League, and we had won the World Championship in 1955. And Tommy John had just graduated from high school, 1960, from Gertzmar High School. He had a basketball scholarship to the University of Kentucky, and he did not go to college. He went directly to the Cleveland Indians as a rookie, and he received a bonus of $60,000. That he and Pete Rose were in the same year, and he got more on his bonus than Pete Rose did. The guy who has 4,200 hits. I mean, give me a break. Anyway, Tom was in the majors for, I believe, 28 years, and the importance of this is this. When Tom got his bonus, and I was very close to the family for a lot of different reasons, but when he got his bonus of $60,000, the first thing he did was pay off his dad's mortgage on his house, which was $8,000. The second thing he did is he bought a white Bonneville Pontiac convertible for $2,600. And the third thing he did was put all of the money into 3M. And I talked to Tom about a year and a half ago, and he still has that original 3M stock that his dad bought for him. And I asked him, how much is it worth? And he said, more money than I made in baseball. So I thought that was pretty easy because it split quite a few times through the years. And he said he couldn't sell it just because of the memory of his dad. And believe me, he and his dad were really tight. Every day after work, his dad worked for American Telephone. He was a lineman. In other words, he checked the major circuits. Didn't have to do any physical labor, but he was a circuit checker. And he would come home from work every day about 3 o'clock after Tom got out of school. They would practice baseball all the time. And anyway, he's a nice young man. He's grown up to be very successful, and still hasn't changed anything from the time he was in Terre Haute, which was really a lot of fun. Okay, let's move on to the next one that we want to look at. If you did the euro trade yesterday that we were looking at, folks, down around that 108.50 level, we noticed that it just did the exact same thing. We took out the previous lows by just a few pips and didn't do anything. Then that's really an important thing. Now look what's happened overnight. Over the last several days, we've made a nice ABCD correction from 108.50 to 109.30. That's a difference of about $800. If you'd done the trade, you should have made somewhere between 300 and 600. I don't expect you to get the 800 because only magicians get that, and none of the magicians that I know trade. But the key point here is to watch what happens here if we get above the 109.40 level. And the reason for that is if we break that 1.618 expansion number that was also nearly perfect 382 off of the high of the 20th, it means there's a possibility that we could be getting a really big trend change here in the U.S. dollar. Now, if this is good, we're heading back down again, and the dollar index is going to start going higher. But at the present time, you've got to give it as much room as you can. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted the chart of the U.S. dollar index in here to show you the importance of it. But before that, I wanted to share with some information. We have a very good friend who is in Las Vegas this week. He is a college wrestling referee. He's one of the senior referees, so they have meetings on rules and stuff like that. So that's why he was there. So I asked him to check on the betting line for the election to see what the line was on Trump versus Clinton. And he called me last night and told me that he had checked 3 casinos, and all of them were not taking any bets on the U.S. election. They did on Brexit. They got hurt really bad because it was around 8-1. But the fact that they're not making book on the because they make book on whether a watermelon's going to land on the left side of the watermelon or the right side of the watermelon. So there's just no action going on, which I thought was rather unusual. Whether that means anything or not, I don't know. But anyway, that's the report from Las Vegas. Now let's take a look here at this U.S. dollar index. Notice that 1.27 number in the middle of the page, how it hit it exactly yesterday at 99.20. That's the equivalent of the euro hitting 108.50. So you can see the relationship between the two, because as the euro goes down, the dollar index goes up because it's 50% of the weight. It used to be 53% of the weight, but now with the renminbi coming in, it's moved down to 50%. So this is the key. Watch this euro, because if it gets above that 109.50 level, this means that this dollar index has a tendency to head to the downside. As a matter of fact, if you looked at that little candle, that is basically a definition of a shooting star candle, where you had the candle really high in the morning and then it closed in the lower 25% of the range. That makes it a candle of a right now we're a little bit lower today, so that is a shooting star candle. So keep in mind that this is a really key level to we'll be watching in these things. And of course, we're watching a lot of different things as we go through these levels each day, and you'll be able to see what's going to be happening to many of these markets. Let's switch over here to the S&P here, because we were looking at that yesterday. We were up at that key level at that 2148 level. And as you can see, what we've done last night is, oh, by the way, we have to sing happy birthday, folks. This is Hillary Rodham Clinton's birthday. At least that's what she tells us. Anyway, that's neither here nor there. But anyway, let's take a look here at the S&P. As you can see, we had a situation where we rallied up to exactly 61% of the high we made back on the equinox on the 21st. We've come down to 2128. The key level to watch here, folks, is that 2121. If we break below that, the 786 comes in at 2117, which I guess would be even the more powerful number. But anything below 2117 would say that we're having a massive ABCD structure that's going to take us down to our original target that we're looking at this on this particular swing, which comes in around 2080 to 2077 based on the December futures. So the key level should be 2117. Breaking below that 78% retracement level would tell us that we're most probably, getting ready to move to the downside. But it's still a little early in the game because it's holding up relatively well, and you can't do anything other than watch it. That's mainly the key thing to keep it on your radar. Okay, now we covered that one. We covered the euro. All right, let's just go over here, and we want to go. Already did the NASDAQ. Let me do crude oil next, because that's one that we're watching. We still believe here. I'll show you the pattern that we were talking about the other day, which was the ABCD pattern. And you'll notice now that we have a nice trend line from August through September. That comes in at the 61% retracement at 47. That's the same level that Joey John and John Logan were talking about yesterday. That's a high-profile area. So really keep an eye on that. That would also be a 20-man line coming in at that level. So it would be an equal retracement from August through September. We were down for a whole month. That would bring us down into the early part of November. Should we get to that level around November 6th, that would be an area where you would have a really nice symmetry between the ABCD patterns and the BC swings. Everything would fit together, and that's what we're looking for. Because we're looking for just patterns that try to match up what they've done in the past. You put in the ratios and the time, and you just to see how things go, you'll be able to go from that level. Now, the other one that we were watching here was this wheat market. Wheat did get down to the $4 barrel. We hit the $4 a bushel. We did hit 396.5. If you did buy the wheat down there with those parallel channels, and that was also a 78% retracement, put your stop at break even at $4. It's rallied $400 off the bottom, hasn't gone anywhere yet this morning, but at least it started in the right direction for you. So put your stop at break even so that you don't have to take any heat on it, because these patterns, when they work right away, and when they don't, that's your first sign that something's not right. That's why if you put something on, you'll be able to tell us that you have a situation where at least you know what you're going to risk. So if you buy the S&P at, say, 2128, and it doesn't go up, it just goes drifting down to 2127, 2126 in about an hour, something's wrong. So you can use a time stop and just get out of it, because most of the things that we work on, when they hit, boy, they're just like magic. So keep in mind that that's an important matter to watch, is the time stop. We could see this very easily in the euro trade yesterday, and then also in the NASDAQ. What happened? They immediately started to work, because once the numbers hit and they began to work, there's just no holding it back. It tells you it's right. It's when they don't work that you want to pay attention to, because those are the ones where you run into a little problem. Now, one other thing down memory lane, Larry Williams had a segment on Kramer yesterday about the stock of Costco, and I'm a big fan of Larry Williams. I've known him for over 50 years, and he's looking to be a buyer of this stock. If we look at it on a technical basis, you'll see that there's some pretty good harmonic numbers coming in here between the 148 and 142 level. We're trading at 150 and change right now. What I would like to see is one more drive down to the 144 level. That would complete a 78% retracement. It would also complete a 3 drive to a bottom pattern over the past month. And that would be a really, really low risk entry point for Costco. Buying it right here at the 151 level, you'd have to risk about 5 points, which is roughly 3%, which is the value of Costco. So I'm in favor of watching this one and waiting to see if this is going to get down one more time. We're just in a sideways action. We have been ever since the end of September. So it still hasn't done, but we'll keep that on the watch list to see if that's going to be a big factor in the stock market as it gets down to that 148 to 144 level in the Costco. I think we have a break coming up. Just 1 second here. Let me get one more here that we cover before we get in, and that is this British pound again. Hold on 1 second, and I'll be back right after these few words.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we are seeing the something that we were just talking about just a few minutes ago happening. We're now trading at 109.35 in the euro and 109.37. We've already taken out that high of the 1.618 level. Folks, I don't buy breakouts very often, but if you had to put a gun to my head, and you don't have to do that, but if you had to put a gun to my head, I would buy the euro here and just put a 20 pip stop on it. That would be about 1/3 of the money you made on the long side if you did the trade yesterday. But this could be a really valid breakout. You don't want it to go below the low of that last low. As a matter of fact, if that breakout is a failure, you'll get back below 109.20. So your risk here would be about 15 pips. So you're trading a contract size that's well over $100,000 for $150. You don't get those many you don't get those many opportunities. I guess you understand that I'm from Terre Haute, Indiana, and not from Harvard. Oh dear. Well, it's the old Hoosier language coming through, but if you do not get many of these types of chances when trading. So that's basically it. All right, we got to watch this one very closely because it's got a chance for a pretty good move. We'll see here we're opening just a little bit lower in the stock market. The gold's holding up. I kind of like the gold market in here. Just give me a second and I'll show you why. It's got some really good patterns that have, oh, here it is right here. Hold on. There we go. Nope, there we go. You'll see here that we had a situation yesterday where we had the 61% retracement pullback where we just made a 38% pullback at the 1270 level. So gold should not get below 1270 intraday here. We're trading around 1273.5 right now. So that's another one that could be very interesting. Both of those have a situation. 1 second, please, because my alert is going off. Oh, the euro is moving pretty good now. That's why let me turn that off. Hold on 1 second. All right, let's take a look here. One other one that we want to be watching. Let's take a look at the gold market here, folks. What I have to do is when I'm doing this early in the morning, which is the key time of the day, I have to turn off these limit minders that I have on to alert me when trades are getting filled or we're getting close to, an area where I have to be watching. So that's why I have to turn these off. Otherwise, the beeper comes on and keeps beeping so quickly that I can't keep my mind straight, and that is not an easy task. Okay, let's move on to what the next one I wanted. We've covered the euro. We've covered the DAX. We've covered just about everything that I wanted. Oh, the volatility index. Here's one. We've got down to that level of 13. We got down the low in the VIX index was at that 1286 level. That touched just went below that sloping downtrend line by just a tiny little bit, and it was only there for a few minutes, and then it snapped back above it. And now we're trading a little above 13. So you don't want this thing. If you did buy the December futures or the ETF for the VIX, you do not want it to go below the low we made yesterday. That's going to be the key level, the key level to watch, because if we get below that, that tells us that there's extremely less fear in the market than we had thought, and things could even start to move in the other direction. So that's the main thing of what we want to be watching as we look at some of these things. As far as the grain markets, we mentioned the wheat. We don't want to see the wheat get back to your break-even point. That's to be the main thing to keep an eye on that. The other thing someone's asked me about, would you buy crude oil here? No, I would not buy crude oil here. If you're looking for a short-term buy in crude oil, folks, go down to a smaller time frame, and you'll see that there's going to be a pretty good ABCD pattern completing at the 48.65 level in crude. And that should be a really good spot to take a look at it. We have a question about a pattern in natural gas. I'll be able to do that most probably at the break. Unfortunately, right now I can't. But we did focus, on natural gas yesterday to show the difference between the November and the December contracts, because November was under a great deal of selling pressure, making weekly lows where we were not doing that in December. That means they had somebody trapped on the long side, and the long was not getting out very easily, and so they were punishing him pretty badly. I didn't follow through with this, but I will at the break. I'll take a look at that natural gas contract to see how much lower it got to. So we'll watch it, very, very closely. Yes, we've talked about the NASDAQ support comes in at around 48.40. Anything below 48, 35 or so tells you that you're heading down. That would be the same thing if we get below the 21.25 level in the S&P. It would be the same thing, going on. So that's the main thing, to keep an eye on. Remember, the first hour of trading is amateur hour. That's when these people that do the hedge funds and do the mutual funds and do the I forget what they call these places, money market places like Fidelity and stuff like that. They put their orders in the first hour, but remember, they don't have any skin on the game, and that's the main thing to look at. Remind me, Mayor, on the 13th of October, Norm Winsky had a really, really strong date for a cycle. That was the bottom. He's also alerted us that on the 27th of October is another really strong day, and that's tomorrow. So we have to watch Thursday very, very closely. But that's the main thing to keep an eye on. By the way, I will be doing that webinar tonight at 5 o'clock to 6 o'clock Eastern Time. I'm going to be discussing in depth and showing you a lot of relationships and harmony and things, and to talk a lot about cycles, because that's how I started to see this pattern many, many years ago, and it'll be an interesting one to go through. I know you'll enjoy it, and basically get a free book and a money-back guarantee. It's pretty much of a no-brainer. But on tomorrow, on the 27th, we do have a very interesting time, because there's nothing happening. We have one of those P-index dates because there's virtually nothing going on in the sky. So that is one of the favorite tools that Frank Tauscher used from the Super Traders Almanac. So October 27th should be a big, pretty big thing to look at. The reason why I'm covering some cycle stuff tomorrow or today in the webinar is because how I evolved through these cycles to get to where I am with the astrology. Because Shane Smolian, when he did this book, he really covered it very nicely. We wanted to start out, with the lunar things, and then later on, his other books will probably be related to Mercury and Venus and some of these other things. But some of these calls that Norm and Shane and Bill Meridian and and Alfie Lavoie, they've been very, very important. So you got to pay attention to these cycles, because the problem is they're not foolproof. They don't work all the time. And that's the main thing to keep an eye on it. It's very, very important to keep an eye on that. Someone's asked a question about the bond market. Folks, I still believe the bond market and the note market look lower to me. If you take a look here at this Treasury bond market, I mean, it just can't get out of its own way. We've been rallying for 2 weeks, and we can barely make a 382 retracement. I mean, it's just absolutely amazing that it can't get any stronger than this. This is the weakest rally we've had, since way back in August. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're going to take a quick look here at this natural gas contract. One of our folks in the Tiger Den had a question about, if you'll notice the November contract, how much weaker it is. As you can check off the March lows, it's almost making a 61% retracement off of the March lows, which shows it's very, very weak. And now it's into delivery. That's correct. November is into delivery. So you get it. First of all, most brokerage firms won't even allow you to put new positions on. But with the December, you'll notice that it is much different because it's coming down to a 38% retracement of the low in March. Now, we did make a really nice butterfly pattern up there at the high, but what we're doing now is we're coming. That was also, you can see this this December has a perfect 3 drive to a top pattern. You can see the first ratio was 2-to-1. The second ratio was 1.53, which is very, very close to 1.618 when you're looking at a small number of ticks that we're looking at here. So this is a major top coming in here. And right now, you can't touch this thing from the buy side, in my opinion, because you don't really have a good pattern or any ratios present that'll give you a place to put the stop in so that you do not have to risk very much. That's really what you want to keep an eye on, at least from my perspective of, risk management. That's the whole key to trading, is the risk management part. It's not being right or wrong. It's how you handle your risk. That's the real key to everything we want to be watching. And that doesn't mean there's no difference between whether you're trading the S&P, whether you're trading Forex, gold, crude oil, any of the grains or anything like that. It's all based on how much money do you have to risk to see how you get into a trade. Because of the risk reward, in the risk reward equation, the only thing that you can control is the risk, and that's what you should focus on. That's why when we trade, about the maximum we ever risk is around $500, with the exception of crude oil, which is about $800. And then most of the times in gold, you have to risk about $800. Remember, gold's $127,000 contract, so $800 into $127,000 is certainly, not very much. That's the main thing that you want to keep in mind. So it's all about risk control, folks. Nothing else. Don't let anybody, let you tell you off that this is going to be any different or not. But we'll be able to see how this stuff works as we go through. For me, the key to look at today is the, hold on one second, the old beepers are still going off today. Hold on one second. And we will get these things lined up here very, very closely. Oh dear. Wow, something's beeping. What is it? Okay, hold on a second. All right, give me a second. All right, good. All right, that's it. Got that one taken care of. And we want to take a look at the, one second here. We want to look at this. Someone's asking a question about the Brexit, 9-to-1 odds on the Brexit. Folks, in London, they have these bookies, and this is also, the futures are traded under bookmakers. I don't know if you know that or not, but they are, and they are tax-free because it's considered gambling. It's not considered speculation. So if you trade the DAX or the E-mini S&P or any of the commodities, that's considered gambling over there, so you don't have to pay any tax on it, which is a pretty good deal. Anyway, let's take a quick look here about this Brexit. When the Brexit was going on, the pound was trading at about 150. It was making a beautiful three-drive pattern up there. It was very bearish, no question about it. The odds were 9-to-1 that they were going to stay in it. Every single poll that they had over there was overwhelmingly, for them to stay in the Eurozone. And yet, when it came out, it was lopsided the other way. So the same polls that they take over there are the same polls that you take here. If you give the right questions, you're going to get the right answers. So just keep in mind that some of these polls are not the way they seem. That's the key thing to be watching. The other question that someone's just asked us in the room is about the interest rates. Folks, the interest rate market has already told the Federal Reserve, where the rates are going. The Fed has been supporting this thing for 8 years now, and now the market has turned and started to drop. We have higher prices in interest rates are going higher because we have lower bonds, we have lower notes. The most amazing one is the fact that the high-grade bonds, the high yield bonds, have held up so incredibly well because people are scrambling for yield when they should be worrying about the overall risk of their capital. So we'll see how history, turns this around. But those are the main things that we want to be watching as we go through here. So far this morning, we've had very little action. We've got a minute or two. Let's just quickly review here. We've had a minute or two. See the euro completely reversed. So you would be out of that. That went up and boom, down it came. That was one of those, and that's why you've got to put a stop in really close. So figure those 15 pips is a good learning experience because it certainly reversed right after breaking it out, and it looked like it was going to go up, and then it didn't. And so that's why you keep your stop relatively close, and you don't have to risk very much on that. I don't know if there was a report or anything, but I would certainly be out of that long euro position now because we just went up there, cleaned out the stops at 109.30, went up to 109.47, and then we quickly broke 30 points down, and the most that trade had in it was 13 pips, but you couldn't have got out even if you were a magician. So we will mark that one up as a learning experience because it just didn't do exactly what we wanted it to. So we'll watch and see how this happens. But right now in the market, we are holding a little bit around this S&P at around 21.28. Remember, the key figure to look at is 21.25. That's the 61% retracement. We hit that same number 4 or 5 days ago. So that's going to be a really interesting one, to keep an eye on. So 21.25 in the S&P is certainly going to be a key figure. The key figure in the NASDAQ, of course, is at that 48.40 level, which we hit. And as long as we stay above 48.30 in the NASDAQ, we have a possibility of this being a pretty good bottom. Remember, the bottom is supposed to come in on the 27th. That's the P index date, and if that happens, then we'll be able to, see that this would be a pretty good. This is going to be a real interesting one because I'll explain more of those P index dates when we get back from our break. But Frank Tauscher, he really loved those. He published those in his almanac, his Super Trader's Almanac every year, and he told me personally he thought those were some of the best timing things that he had ever seen. And a P index date means there's just nothing over this in the sky right now where the aspects are coming together. They're just void of any aspects, and so that's a key time. A lot of times you'll see somewhere between 10. I think the average is about 8 aspects a day, but for tomorrow we only have 2. So that puts it out into the bell-shaped curve of the 2% level, so you don't see those very often. So this is going to be a real interesting day to watch, tomorrow in the stock market. Maybe it'll be today, but usually it's spot on the day, so I have to give it the benefit of the doubt to see if it's going to be the case. Okay, 877-927-6648. We'll take a break and we'll be back to wrap up today's show.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we want to review that we are looking for a pretty significant low tomorrow, October the 27th. So we'll watch this very, very closely. Remember, longer-term target here in this S&P, we did get down. We hit the exact number on the 61% retracement at 21.25. The low was 21.24.75. So if it gets below that number, you don't want to be long, but it did have major support there. We also hit the exact number in the NASDAQ at 48.40. also completing that pattern on a short-term basis. So these are the keys to watch. And believe me, these numbers are known by some people, so you'll see some support coming in there. They're not self-fulfilling prophecies by any stretch of the imagination, but they will hold support for certain periods of time. And then if there's another cycle out there, it will move it to the downside. Remember that the Bradley model that we've been watching for quite a while is still working. It's starting to head down. And if you'll notice here, you'll notice that we are going to be over a Bradley date coming in here tomorrow and Friday. So we want to watch that. That tells us we should get a 5 or 7 day rally of some magnitude if that's the case, looking at it short term. But the patterns are telling us that we do have a multiple price swings coming in the S&P at the 2080 level. And I think that's the key from a longer term point of view. Shorter term, we have support at 21.25 and 21.17. And believe me, there's virtually no volatility in the market. So when we do get volatility, these things are just going to be, they're going to knock everybody's socks off if they're not prepared for it. But here at TFNN, we will be prepared. There's a lot of smart people that give you a lot of good information, and I listen to most of them, and they really understand what they're doing, so they'll try to get you to the promised land. I hope you'll be able to join me tonight for the show. I think it's going to be a lot of fun. I've had a lot of fun preparing for it. Boy, did it bring back a lot of memories of all the people that I've met and things that I've worked on through the years. So it'll be a fun show. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.